What's going on, guys? Welcome back to another episode of Hustle with Jesse W. And today we're going to go over what's going on in the market. Are we in a depression? Are we in a recession? Are we going into either of those? Are we going to recover next week? No one knows. Check it out. All right, guys, so we're going to go ahead and jump right on into this video. And first things first, and this is something that maybe could help the economy, right? Smash the like button for me and subscribe to the channel because, hey, the more the channel grows, the more chances I have to make a few bucks in ad revenue, and then I can do my own stimulus package and spend some money on in the economy. It's a win-win. So do me those quick favors. Also, comment in the comment section below what you think is going to happen with the market as time progresses, where our bottom is, when we're going to get back to the top, etc., etc. And also remember, it's always, in my opinion, a good time to invest. So link in the description section below to Webull. If you download the app, fund your account with $100, you'll get 2 free stocks, one of them valued up to $1,400 potentially. And if it's not valued up to $1,400 and you just get two $10 stocks, that's $20. That's lunch. And who says no to free money? So make sure you take advantage of that. Now, let's go ahead and jump right on into this market and see what's actually going on here. And what I have for you is, once again, the big picture. And I have multiple graphs we're going to go over. We're going to go over a lot of things here. So go ahead, grab a cold drink of water if you need it, because we're about to jump into this right now. And like, as you see here, every single recession, depression that the market has gone through over its entire history, okay, from 1797 all the way through up until 2008 and now 2020. So you have everything here. Like, we're talking about things from like the Great Depression lasting from 1929 to 1938. That's the biggest crisis we've ever had here in the United States. That's a long time. Okay, that's a long time, from 1929 to 1938. That's the biggest economic crisis in the U.S. history. I would say that it's way worse than the 2008 Great Recession, because that wasn't a depression. It was a Great Recession. That's what it's called. And it certainly didn't last as long as this did. Now, you see here, we had the depression, back then. We had, another recession in 1949. There was more in 1953, 57, 60, 70, 73 to 75. We're not going to go through each and every one of these. We're just going to go ahead and pinpoint some of the bigger ones and go through those. You have the 1980 to 1982. And then you have the 90 to 91, and then boom, 2001. And 2001 is very important because 2001 was a burst of the dot-com bubble. A lot of, in the 90s, when the internet started to become a thing, a lot of companies came out and started to, just put out dot-com businesses and have monster valuations, kind of like we see going on in Silicon Valley, and monstrous valuations without turning profits. And this created a bubble in that dot-com era that bursted in 2001, and bang, right there, boom, we got hit hard. Then again, 2008, 2009, we had a double whammy. We had the Great Recession, subprime mortgage rates, issues going on. Then you had global banking issues going on. So we got hit double, okay? And we got hit hard. And that lasted a few years as well. And then now, we're in 2020 and we get hit with basically a virus. It's funny as it sounds, we got hit by a virus. Our antivirus was down and we got hit. And there was only one thing that could have helped us, and people weren't doing it as much, and that was smashing the like button for the YouTube algorithm. So go ahead and make sure you do that. Now let's go ahead and take a look at some charts here. So we're going to put what we just saw there in perspective, okay? And we're visual learners, most people are. So things like a chart really, really help us pinpoint, okay, this is where the recession was, this is where the depression was, how did we recover? And then we see those lines. Here you go, the depression, bang, that was nasty. And then after that, just basically, sideways consolidation, upward movement, sideways consolidation, upward movements, all the way up into the 60s. Nice growth, steady, nice growth, clean. All right. Then in the 80s, when we saw those other recessions kick in, bang, we come back down. We hold support. Funny as it sounds, technical analysis holds true. We hold support here in front of this, area right here above 250 and recover. The 90s roll around. And what happens in the 90s? In the 90s, we had the dot-com issue start to, show its face again. Then bang, we put it back in after the 2000, and after those bubbles bursted, and from there we bounce again. But that bounce is short-lived. Why? Because boom, subprime mortgage rates, global banking issues, because as you remember correctly, 2008, 2009, it wasn't just a US thing, it was a global thing. And that was a nasty one. That was a nasty one. Like if you look here, Great Depression, nasty. Everything else, slight, to heavy pullbacks, but nothing like the Great Depression, obviously, or the 2008 crisis, where, that's a nasty one. That's a nasty one. All right. That's a real nasty one. If you were around back then, it was not a pretty time for the economy or for the stock market in itself, right? In its entirety. However, what I want you to notice, after each one of these massive drops, big rallies, drops, rallies, drops, rallies, constant move up with, sideways consolidation and slight pullbacks, rallies, okay? Big push down, rally back up, nasty push down, one of the biggest, if not actually the biggest bull rallies ever in history after the 2008 crisis. Look at that move. We had our ups and downs, but look at that move. And now here we are in the middle of yet one other crisis in the markets, which at this point is not just a US issue, it's a global issue with this global pandemic on this ailment, okay? And the reason I don't say the name is because I've read that it can cause the video to be demonetized. And while my channel's small, so every little penny counts, I'm not going to mention the name of what is going on with this, ailment. But it's a global issue, okay? It's not just affecting us in the US. It's not just affecting China. It's not just affecting Italy. It's affecting the globe, because when trades aren't happening, when countries aren't able to send, to and from products, and we're not able to travel freely as effectively as before to and from certain countries, it affects the economy at a global level, okay? So not only are we being hurt locally, and I'm talking about as local as cities getting shut down, we're talking about the global level. How far back will this pullback be? I don't know. I'm going to take an educated guess, and I'm going to show you based on chart and technical analysis now, but I don't know how deep of a pullback this might be. All right. So while buying these dips ended up in rallies, if you're never really trying to catch the bottom because you never know where the bottom is, and if you're just waiting on the sideline, waiting for that bottom to be put in place and you miss it, because chances are you miss it. If you get the bottom, it's just, a pretty lucky chance or a pretty lucky educated guess, etc. If you're buying on the way down, okay, then when we recover, you make money. If you're buying after the bounce, as we recover, you're making money. But if you don't buy because you're waiting just to fish out that bottom, and you don't buy here, and you don't buy here, and you never buy, then you make no money. So where does this pullback take us? Well, before we go look at the chart, let's discuss why this is happening. We've already established the why. Now let's establish how long it's going to last. Until a vaccine is fully curated and made and is effective, we're going to see up and downs. Where do we stabilize is the key. Because this year could be a year of lots of up and down grindy action. But within that realm, there's got to be stability. There's got to be a range, a trading range. Okay, there has to be. We can't keep having 1,000-point days up and 1,000-point days down throughout the entire year. It's just going to exhaust the system. So at some point, we're going to have to find a bottom, bounce off of it, and consolidate sideways. Okay, it's just the nature of the beast. It has to happen. Now, where does that happen? That's going to happen once the cases have kind of stabilized. We're still catching up. We're still playing catch up. Getting test kits out, etc. And what we're seeing now is case numbers go up. It's just playing catch up, playing catch up to a month basically of backlog. Once that's caught up, we should be able to see a bottom be put in place and some sideways consolidation going on. Okay, what I expect at least for this upcoming week, within this week, what is this, like the ending of March, middle of March, I expect us to kind of hit a little bit of a bottom where we kind of hit already, and then just sideways consolidation before we drop one more time. And when we drop that one more time, it should coincide with us catching up with cases and then the bottom be put in place. Now, this is just a mix of an educated guess of technical analysis along with a timeline and what I think will take place. Now, let me show you on the chart real quickly what that looks like. I've been busy drawing lines for a long time on the SPY because I've been trading the SPY for a while. This level right here is 2018 level. We are underneath that already. And this level here in the 220s, 227, 230 area is coinciding with this level right here, which is a 2016 level. That's where we're at now, 2016 levels. The next level of like major consolidation isn't found until down here in like this 2010 area. Right here, 2010, like this 2009 to 2015 area. That area right there is the next level of consolidation, which you see tops all throughout 2015 until we break through it and then hold it as support and break out. Generally, as technical analysis goes, that would be a safe area where if we can get the virus under control by that level, we should not see underneath that level other than maybe a quick pierce and that's it. If the virus isn't under control by that level, then I'm afraid to say I'll start to really get concerned because of how long it might take to recover out of this. Now, I just see this as a great buying opportunity for multiple generations. Those of us who didn't start, investing after or during the 2008 crisis have always said, oh, if only I could have a shot at investing at least in the 2015 era. Well, guess what, genius? We're in 2016, 2015 eras. Somebody put a time machine, put a flux capacitor in that thing, and we sent us back into the future, and we have a shot to invest in it now. I'm not telling you to go out and invest, but I'm investing. And I'm investing as heavy as I can. We always knew, most of us, that we would have some major pullback in the markets. Didn't think it was going to be this nasty. Sooner rather than later. I was personally hoping that would happen in a couple more years where I would have a little bit more cash on my side and I can throw more money into the markets apart from my retirement investment. So now I'm doing what I can with what I have available to me and I'm putting it into the market and I'm buying ETFs, I'm buying stocks like Disney, stocks like Boeing, etc. Why Boeing? Because Boeing has a lot of support from the federal government. Defense contracts galore. They're not going to let Boeing fail, in my opinion. And Boeing has a double whammy. It got hit hard because of its own internal problems with planes, and then it got hit hard with the virus. So it's at a massive discount. So I'm buying into Boeing. And while the money that I'm investing into my short-term swing, and when I say short-term, maybe it's 5-10 year swings, apart from my long-term stuff, which is 20 years, which I don't see how I lose 20, 25 years, maybe even 30 years of investments on that. On my short-term one, it's not going to be life-changing profits that I'll make from that, but it'll certainly be a real nice profit, enough that I can do something really nice with it, maybe buy another rental property. I don't know, it'll be enough to be able to do something good with. Just sadly, because I don't have, $50,000, $100,000 to throw into it for a short-term swing. I wish I did. That's what I was hoping would happen. But hey, one has to do what they can do with the money they have. And it's better than doing nothing, because leaving it in the bank or under the mattress isn't going to generate me any profits in 10 years. My outlook for those is 10, 15 years potentially on those swings. That's why I'm not calling them, I'll call them long-term investments, but they're primarily a long-term swing in a way, because I do plan to sell them before retirement. So that is my forecast. Let's say this 2015 level here, if and only it will hold, it should hold if and only at the time that we get to that level. If we don't break under it and we get the virus under control, that's what I would expect. Now that we see what my personal forecast is, let's go here and take a look. Can you see that perfectly? Well, you might not be able to read this. But the graph is the graph. And this right here is the Great Depression. Look at the recovery afterwards. Monstrous recovery Okay, then we have another recession, absolute huge recovery. Then we have another recession. And while it's not as big of a recovery as these here, that is still a monster recovery compared to the size of the pullback. Then we have another pullback, yet another recovery. Each recovery is bigger than the pullback itself, be it a recession or depression. Each recovery, no matter how small it may be, if this is a small one, is still bigger than the pullback. Okay, so what does that tell us? It tells us if we buy into it, if we hold on to our investments and just leave the losses as unrealized paper losses and not realize those losses, generally speaking, history tells us that we should be able to make our money back with profit, right? Boom. Another one here, and that's a nasty one. It's bigger than this one and this one and this one. Look at that recovery. Monstrous recovery. That's an 845% recovery. That's what that number says there. I wish I can make this bigger, but it won't let me. Let me see if, oh, that works. That works some. So we have that 845% recovery right there. Then we have another pullback, another recession, short one, 3 months. Okay, here, this is the Great Depression right here. This is a 6 month pullback, a 6 month pullback, a 1.6 year pullback, 1.8 year pullback. And I'm calling these recessions pullbacks. 3 months pullback, okay? We lost 29%. And then the recovery, 816%. Bang, over 12.8 years. Another pullback here, 2000, that's the .com. What is this, 44.7 loss, okay? 108% gain afterwards. Then the 2008 issue, bang, we lose 50%. Boom, 384% over 9.6 years. So you can see that each one of these recoveries are huge. So this next recession that we're facing right now, because believe it or not, we are technically in a bear market right now, officially. So this next recession here, how deep is it going to pull back? I don't know. You don't know. We can all take educated guesses. Will it be as big as the depression? I hope not. I hope not. Will it be bigger than the 2008 crisis? I'd rather it not. How big will it be? We don't know. We could be nearing the bottom here only if we can get these cases under control. Companies are able to get back online fast. We know we're going to take Q1, Q2, probably 3 losses on all these companies. Okay, GDP is going to stop. It's going to go to 0 for sure. We're going to have some negative GDP in there mixed in. But if we can get this under control and recover from it within a year or 2 max, the recovery from here should be astronomical, in my non-professional opinion. And therefore, I'm investing every single day, every single week, every single month, apart from my steady retirement investments, a little bit extra here and there where I can, when I can, pinpointing my entries and having fun with it along the way, knowing that I'm buying quality companies, not speculative crap. I'm buying quality companies, okay, with an outlook of minimal 10 years. If I recover, and these stocks go back up to all-time highs in 2 or 3 or 4 years, will I take my profit? Not on my long-term stuff, but on my short-term swing trade? Heck yeah, I'm going to take profit. Will I take it all? I don't know, maybe. It depends how much I can accumulate from here to then. I'd love to keep buying, and I probably will. And that way I can take, half off or 3/4 off and just leave a quarter running there, see what happens. But that's what I'm doing personally. Let me know what you're doing, what your plans are, what you're thinking here. I think looking at the bigger picture here and putting things in perspective really help out, cause a little bit less panic, bring emotional levels down, because we can't make clear-headed decisions when we're emotional. And it really puts things in perspective. Let me know what you think about the video. If you don't want to share about what your long-term stuff is, let me know what you think about the video, what your forecast is. Remember to smash the like button for me, subscribe to the channel. Remember, if you want to invest in Webull, like using Webull as your stockbroker, link in the description section below. You get 2 free stocks if you use my link when you fund your account with $100. And I'll catch you on the next one.